Hey, hello, folks. Welcome to Pro Trader Strategies. My name's Eric Wilkinson, and this is Spotting the Trade. I'm going to get you folks what you need to know before you roll, and that's going to be talking about the economic data, see how that impacts the overall markets with a little market analysis, and then maybe talk about some option strategies we can sprinkle in there based on that assumptions we come up with in that analysis. All right, so what's going on in the overall markets? It's getting a little dicey here. We've been talking about Bitcoin. Is it going to find some support here with this higher inflation, everything else going on? Is it going to act as a retainer of value? Not really showing up right now. Let's jump into the overall markets and kind of filter in what we're looking at today in accordance to economic data. Not really anything coming out today for that, but later on this week, what do we have going on? It is the FOMC meeting. That's going to be kicking off on Tuesday. It should go Tuesday, Wednesday, and finally have the results of the meeting on Wednesday there. So 2-day meeting. We probably won't hear anything coming out of these folks. Even the Fed governors that like to talk loosely will be on lockdown right now heading into this meeting. So they're going to be talking about the economy, but they will not be talking about policy whatsoever. We also get a couple other economic data points coming out this week that should be driving the markets, core durable goods, things like that, crude oil inventories. Again, we'll see how that's driving the overall markets, and then get maybe a little bit more directional moves coming out of the markets. But right now it is pretty much to the downside here. As you can see, crude oil starting to roll back over. And that's a good thing as far as I'm concerned. Most people claim that higher gas prices or higher oil prices is good because that shows demand. Well, that's not really what we're seeing right now in the economy. Really what we're seeing is the drive here is due to the lack of supply. And that's not what we want to see while we have an economy trying to come out of here, because that will exacerbate upside moves in pricing like crude oil there. Now, bonds, not surprising, we're seeing that continue to slide as we're heading into a week where we're expecting the Fed to raise interest rates by 50 basis points. I don't think they're going to do anything other than 50 basis points, folks. They are going to do less. They are going to do more. They've already kind of told us what's happening here, and that's where we're going to see that consistency going forward. Gold futures are coming off here. This is a real surprise to me. I was expecting to see finally to have gold have some upside moves here, but it's really finding resistance and struggling to stay up here above 1850, which is where I thought we were going to go from 1850 to 1950. Almost immediately, we kind of stalled out on that move, and it's not looking like we are going to see this rotation out of some stocks and into things like that would be a stayer of value. Gold, right? That's normally what we see, is that's the retainer of value as fear starts to come into the markets. Well, we're seeing people raise cash, it seems like, where they're putting money into cash rather than anywhere else and letting it get to work. Bitcoin, folks, downside here, 1830 is exactly where we're headed to. Some folks are calling for a 1950 support area. I have not seen that, but I think 1830 is exactly where we're going to go for this 23 Fibonacci. It's going to put some real pain on some traders there, as most folks have been getting long up here in the 30s and 40s, thinking that that was the time that there was acceptance of this underlying, not really getting that follow through right now. As a matter of fact, it feels like it's a bit of a panic at the disco. I don't even know that 1830 is going to hold here. These cryptocurrencies, gold, the retainers of value just not acting like they should. There was some fodder out there that this selling was due to a glitch in the system, if you will, somebody trying to get through some inventory. But I have a feeling that this breakdown below this 28,000 Fibonacci that we've talked about, where we've consolidated, it's to the downside. We should expect another measured move, if you will, from this level where we consolidated the last time, dropped. We would expect to see that consolidation happen again, and that's probably going to happen right there at that level of 1830 or 18,300 that I've been looking for. NASDAQ falling out of bed, breaking the entire head and shoulders pattern that we were looking for. If we were going to get that head and shoulders pattern on Friday, we needed a bit less of a sell-off here, not really breaking below 11,500. And you can see that we are just just trending above that right now, but that 11,500 level, which was the previous low there, we broke below that overnight. So are people in the day session going to kind of count that? Yes, they will. They'll see that all of this pattern has been broken now on that head and shoulders. As a matter of fact, now we're just making that move to the downside. Weakness across the board here. Again, Dow Jones Industrial Average, all of these head and shoulders patterns are pretty much broken. One might be able to claim that if we got a nice big rally back here in the Dow Jones, that's still intact, but we can see here in the E-mini S&Ps, that one's broken. So while I was kind of looking for these head and shoulder patterns to set up here, we can see that they're easily getting broken down right now. I might even strip out some of the overnight trades just to see how this pattern looks without that other data added into there, because sometimes the overnight sessions can make this data look a little bit off, if you will. So we can take a look at the overnight, just no attempt whatsoever to make a move. As a matter of fact, it's a gap to the downside, and we've gotten this gap opening that usually is indicative of bearishness going forward. So all day today, I don't think there's going to be much of any attempt at a rally. I think it's going to be mostly selling pressure coming into the markets. Nothing really happened over the weekend to change thoughts here, but we are heading into an FOMC, and institutional money this week is going to try to hedge all positions ahead of that, because rising interest rates is indicative of downward pressure in the equities. And I think we're going to see that play out this week, especially with these gaps that we've been seeing to the downside. All right, good luck. Any type of rallies here, we're looking to cover calls. I'm not looking to sell some puts right now, especially with this pattern that was breaking down. That pattern was still intact. It would have been more likely today that I would have been talking about selling puts on the opportunity that we found a bottom. But this market action right now is not giving me the confidence that we have found a bottom here, folks. So pain coming forward. Look to make sure you're hedging your positions. Covered calls is the best way right now, unless you want to just pull the ripcord on things. Volatility is just way too high to be buying puts for directional moves right now. I talk about that in my videos. Please check those out so you can understand what you might be getting yourself into if you're starting to sell some puts, or buy puts at these levels, or even buy calls on a directional move. It's just not going to work out very well. All right. If you can't take that,